Welcome to the Crypto Prism channel. This is a Bitcoin trend and market structure analysis. Let's first look at the daily chart. The current market is still dominated by bears. The rebound is just a correction, not a reversal. However, it's worth noting that the pace of the decline is slowing down. We are entering a decision window. Let's first look at the overall structure. From the chart, we can see that starting from the high at 126,200, Bitcoin has formed a complete and standard downtrend. This descending trendline is very clear and provides strong resistance. Every rebound has been capped by it. Highs keep getting lower and lows keep getting lower as well, which shows that the primary trend is still bearish, not consolidation, and not bullish. Even though there are rebound structures in between, they are all corrective moves within a downtrend. Now let's look at the Fibonacci levels. The current price is stuck around the 0.236 level, slightly below it. At the same time, this is a weak zone. In a strong market, pullbacks usually get bought at 0.382 or 0.5. But right now, price can't even hold above 0.236, which shows there is basically no bullish capital willing to step in. The rebound is just short covering, not real acceptance by the market. So the essence of the current move is consolidation at the end of a descending channel. What we're seeing now is a sideways structure. In essence, this is weak consolidation after a drop. Not a base building structure. You can see that every rebound gets rejected once it touches the descending trend line, and it gets pushed back down. Highs are getting lower and lower. In terms of volume, it is gradually shrinking as well. Bulls lack continuity, which is a very typical bearish continuation pattern structurally. So will price continue to fall? My view is that there is still a high probability of another leg down, but the pace won't be very fast. Here's why. From a structural perspective, the upside is capped by the descending trend line and the 0.236 Fibonacci level. Below, we have the previous low area around 80,600. If price fails to effectively break and hold above the trend line, then it will most likely test the previous low again, and may even produce a false break, a quick wick down and rebound. This is exactly the type of structure the market loves to use to shake out longs and trap them. Will it directly reverse to the upside? To be honest, the probability is not high, but it's not completely impossible. So what would count as a real sign of strength? It must meet the following condition. A daily candle body must close above the descending trend line, and during the pullback, price must hold above it, forming structural support. The most likely scenario going forward is sideways consolidation, followed by another move down to test the previous low. This fits the current structure best. The second scenario, with a lower probability, is a breakout or fake breakout above the trend line, luring in longs and then dumping hard, a classic false breakout and shakeout. But this has a relatively low probability. This is not a bottom fishing phase right now. We need to wait for the structure to complete. Both longs and shorts are easily shaken out here. For short-term trades, be quick in and quick out. Don't chase direction. The market looks calm, but the structure is unhealthy. Real opportunities come when the market is cautious, not during this current consolidation phase. Next, let's look at the weekly Bitcoin chart. On the weekly time frame, the market has shifted from strong bullish consolidation into a medium-term correction phase. But note that this is not a crash. It's a correction of a high-level trend. Let's look at the overall structure. The previous ascending channel has already been broken. Price rose from around 49,000 all the way to 126,200, forming a very standard uptrend. But now you can clearly see that price has broken below the lower boundary of the channel, and for several weeks in a row, it has failed to reclaim it. In technical terms, once the weekly chart breaks below an ascending channel and cannot quickly recover it, it means the primary trend has shifted from uptrend to correction. Starting from the high at 126,200, we can see that highs are continuously moving lower. Rebounds are getting weaker and weaker, and each rebound gets sold down quickly. This is the early structural form of a downtrend. In other words, this is no longer a simple pullback, but a complete trend inflection, followed by a corrective cycle. Now let's look at the Fibonacci levels. You can see that the 0.5 retracement level is where price is currently stuck, moving sideways repeatedly. What does this mean? In a bull market, 0.5 and 0.382 are the lifelines for bulls, but now price is stuck below 0.5 and can't regain strength, which shows that bullish momentum is clearly fading. If this were a strong bullish market, price should have rebounded back above 100,000 long ago. So what is the essence of the current structure? It is high-level distribution, followed by a medium-term correction. This is not panic selling, but a slow grind lower. with repeated bull traps. That's why so many people keep getting trapped here. The most likely next move is continued sideways to downward action. Right now, Bitcoin is not a good long opportunity. Patience is required until structure and direction become clear. The most probable path forward. If Bitcoin fails to reclaim the lower boundary of the channel, price will likely continue to retest lower levels, first targeting the 82,000 USD area, then potentially 78,000 USD, and in extreme cases, a retest of the 75,000 United States dollars support cannot be ruled out. This would be a structurally normal pullback. A lower probability scenario is prolonged consolidation between 85,000 and 90,000 USD, using time to exchange for space and building a base sideways. This would be preparation for the next move, but it would be a slow-paced market, not a strong rebound or a reversal signal. That's all for today's analysis. If you haven't subscribed to the channel yet, please subscribe. See you in the next video.